So if you're a dividend investor like myself, then I'm sure you enjoy investing in those healthy stocks that pay out dividend checks regardless of how the stock market is doing. Now, normally those stocks pay off dividend checks in a quarterly basis, but in this video, we're gonna talk about my top 5 favorite dividend stocks that pay monthly. So let's get started. What's going on, guys? My name is Darren Jackson, and today we're going to talk about dividend paying stocks, but not just any dividend paying stock. Now, try to follow me on this so I can explain to you my mindset of why monthly dividend stocks are really important to me. So similar to a lot of you guys out there, my ultimate goal is to have streamlines of passive income, one of those being from dividend checks. So hopefully being able to have that will allow me to use those funds to do things such as pay my monthly bills. Now that's really important because monthly bills happen monthly and they're normally the same price every single month. However, despite even if you create your stock portfolio to have a bunch of quarterly stocks that altogether will give you dividend checks every single month, more than likely they won't be the same amount. So in hindsight, you may be able to afford to pay your monthly bills with dividend checks one month, but not the next month. So my solution, and yes, I'm probably a little late to the party, was do a lot of research on dividend paying stocks that paid every single month. So in this video, we're gonna talk about my top 5 favorite monthly dividend paying stocks. And make sure you guys stay around for the full video because we're also gonna discuss things like what rate is and what the payout ratio is and why that's significant to these particular stocks. So let's get started. So the first monthly dividend paying stock that I want to cover today is called Stag Industrial. Now, Stag Industrial is one of the 3 REIT companies that's on this list. Well, one of them is similar to a REIT, but it is a REIT company. And really quick, a REIT company stands for a real estate investment trust, and REITs are companies that own and sometimes operate income producing real estate. So that can range from residential properties to factories, other commercial buildings, huge downtown buildings and stuff like that. Now specifically with Stag Industrial, they are into the acquisition and ownership of single tenant industrial properties within the US. Now I've invested in this company for almost a year now, and I really like investing with them. For one, obviously because they have almost a 6% dividend yield. And one thing you're gonna find similar to all of these companies is that their dividend yield is high. Now another thing that's also high is their payout ratio. Now the payout ratio for this company is 242%. And payout ratio is essentially the amount of dividends that you'll receive per share of that particular stock divided by the earnings per share. And we're gonna get more into why that is significant with all these companies, despite that they are gonna be pretty high. But what makes me pretty comfortable about having stocks in this company is that they're coming off a 9-year dividend growth, and currently they're giving about $1.44 a year. So every month I've been receiving 12 cents per share into my stock portfolio. So that's pretty cool. The second stock on my top 5 is called Main Street Capital. Now, Main Street Capital is a BDC, which is a business developmental company, which is similar to a REIT based off another characteristic that REIT has. So typically REIT companies pay out about 90% of their annual earnings in the form of dividends. So they're known for giving back a lot of money to their stockholders, hence why the payout ratio for these companies are pretty high. This one, an example, is almost at 120% payout ratio. Now, this company provides debt solutions to lower and middle class companies, and they support management buyouts, growth capitalizations, recapitalizations, and other things like that. They're also running at a 9-year dividend growth similar to Stag Industrial, and they're currently at about a 9% dividend yield, which means you're making about $2 and almost 50 cents a year per share of stock that you have with this company. So the fact that they have numerous years of dividend growth and a high dividend yield should give you some more comfort why you should invest in this company. Now, speaking of longevity and growing dividends, this next company is a company that I've heard of a lot, and I'm sure you guys have heard of many times when it comes to monthly dividend investing stocks, but I'm surprised that I hadn't invested into this company any sooner. And that company is Realty Income. Like literally, the nickname of this company is the monthly dividend company. So before we get into the numerics with this company, Realty Income is a real estate company that invests in freestanding single tenant companies that you've probably heard of, such as, Walgreens and I believe Dollar Tree. And these commercial properties span in areas such as here, the United States, Puerto Rico, and even the United Kingdom. Now, just to get it out the way, they have a payout ratio of about 182%, but that almost doesn't seem to matter because they have over a 5% dividend payout. And this is coming from over a 4% dividend payout ratio over the past 4 years or so. And speaking of growth, they've had over 600 consecutive months of paying their monthly dividends to their stockholders, and they're coming off a consecutive 88 quarters of dividend increases. That's what, like 50 years? That's ridiculous. So they're showing that even though their payout ratio is super high, that they're consecutively paying their shareholders off every single month. So this is definitely a company that I'm literally giving you approval right now to pause this video and go Robinhood or whatever brokerage app you're using and invest in a couple of these stocks and then come back and press play because I got a few more stocks I want to talk about. So these next two companies are Canadian-based companies. And the first company I want to talk about is called Shaw Communications. Now, Shaw Communications is a company that provides telephone or other types of telecommunication, television, internet, and mobile services that use a fiber optic network, which is actually pretty cool and pretty important. They're currently at about a 5.14% dividend yield and at about a 95% payout ratio, which is the lowest on the list of these top 5 monthly dividend paying companies, but isn't low for the sake of imagination at all. Now, what does make me feel comfortable about investing in a company like this is that they do have a 2-year dividend growth. So they're showing that they're able to not only give money back to their stockholders, but they're making enough to be able to increase how much they're giving back to their stockholders to persuade them to stay. But they're also investing in 5G technology, which is very important considering if you look at their portfolio like on Robinhood, you can see the trend kind of goes up and down. So you're not really seeing that they just had a tremendous drop solely based off this recent pandemic. But considering this investment in 5G, I feel like this is a company that is okay to invest a couple of shares into to make up your stock portfolio. But I personally probably won't make it a huge aspect of my stock portfolio. And the last company on my list of top 5 is called Pembia, which is another Canadian company. And they are in the oil and gas industry. They are a pipeline operator company, and I think they currently have about 4 billion barrels of oil within the entire company, which is a bit. They currently have almost a 7.9% dividend yield, which is really high, and about a 114% payout. Now, they have had about a 4-year dividend growth, which is really important. And another reason why you may want to consider investing into a company like Pembia is that if you look at their history, they're about $20 cheaper than they were before this pandemic. And I bring this up because a lot of companies, including this one, are a lot cheaper than they were prior to the pandemic, which is obvious. So you're also getting the opportunity to buy a cheaper stock that's had numerous years of dividend growth and has a high monthly dividend payout. So definitely keep that in mind as well. Now, I said I would mention the importance of payout ratio, and as I've gone through all 5 of these stocks, you can definitely tell that the payout ratio is super high. I mean, the lowest was Shaw Communication at about 95%, but by itself, that's really high. I actually went on dividend.com while I was doing research to get more of an understanding of how significant payout ratio is, especially with companies that pay monthly. And I was able to pull up a chart that labels the health of a company based off its payout ratio. So for example, it had a good stock being rated at 0 to 35%, a healthy company being rated at 35 to 55%, a high company being rated at 55 to 75, and a very high being 75 to 95. All of these companies are in a category called unstable, basically. So with a payout ratio being 95% above, it's pretty much giving the investor the idea that this company is giving basically all of their money that they're making every year in the form of dividends. And that's kind of scary because if they don't have enough money to hold to the side to reinvest into themselves to make the company better, then you could expect the companies to slash its dividends so they can save money in the long run. But these particular companies, especially the first three REITs that I named, have a long history, a year's worth of history of paying back their shareholders dividends. And the reason being is that these are all companies that have something to do with tenants and real estate. So with tenants, they're getting money every single month, so they're comfortable with taking that monthly income and just giving it back to the shareholders on a monthly basis. So regardless of the payout ratio being so high, I do feel like you should be comfortable with investing in companies such as these. Now, of course, again, investing in monthly dividend companies is going to require you to do extra research, but once you start to come to more of an understanding of what these companies are about in their recent history, you can judge on how much you should invest in that company within your entire stock portfolio. But I do feel like these companies are companies that you should definitely consider putting in, especially if you want to receive that monthly stream of dividend income. And if you haven't yet, I actually made another video talking about my other top 5 favorite stocks to invest in, especially during this pandemic. So make sure you check those out and any of my other videos. Hopefully they'll help you out in your investing journey as they have with me. So until next Thursday, guys, take care.